stocks are hitting new highs, the Fed is debating another rate cut, and inflation just won't quit. So, as we are heading from November into December, are we nearing the top, or is this bull market just getting started? In this video, I'm gonna break down what's happening from November throughout the end of December, covering stocks, inflation, Fed cuts, and even crypto, in order to help you see where is the market heading next. So stay tuned. Hello and welcome back to my YouTube channel. By the time you watch this video, 2/3 of November would have passed. Stocks are still trading high. The S&P 500 is roughly up 14% year to date. Tech and AI stocks are still driving gains, and energy and industrials are returning to form. But the shift from November to December could be pivotal. Despite the Fed cut rates, inflation still remains sticky at 3%. Some officials are saying enough cuts for now, but the market is still betting on another cut. So far, employment is strong, but it's starting to get cooler now, and GDP growth is steady around 2 to 3%. So, from the looks of it, everything seems cool. But the real question is, how long is it gonna sustain? Now, let's have a look about the bullish view of the November to December stretch. The bulls will say, earning remains robust, the Fed is still supportive, liquidity remains high, and year-end seasonality remains favorable. Some firms are even projecting that the S&P 500 could hit the 7,000 point milestone before the end of November. Now, let's look at the bearish view. Valuations are elevated, inflation remains above target, and early layoff data suggests some labor market softening. Even Fed insiders are cautioning about complacency. So as we head toward December, the question is not how high, but rather how sustainable. So if momentum fades, we could see a meaningful pullback. Okay, so far, inflation seems to be the biggest wild card that we have to be on the lookout for. The latest number, CPI, running over 3% year on year. That's why some Fed members warn against further rate cuts. But markets currently are still betting on another rate cut before year end. So, if in December the Fed signal another rate cut, the stock market could get a boost and the 7,000 point ceiling could become a reality. But if not, expect volatility as we wrap up 2025. So my advice, keep an eye for Fed tone and next inflation release. They will set the tone for short-term planning. So what sectors are likely to lead between November and December? In tech and AI, Nvidia and AMD seems to be the clear winners. Since oil is stable between $60 to $65 per barrel, energy sector seems to be making a comeback. If the perception of volatility dampens, we could see banks and insurers given the opportunity to shine as well. If risk rises, we could see healthcare and utilities quietly outperform other sectors. But that depends on risk. So short-term traders might focus on tech, AI, whereas long-term traders should look toward diversified ETF, dividend plays, and holding through any year-end wobble. Now let's quickly glance at crypto and see what's happening there. So as we all know, and if you watched my video in October, crypto peaked around $126,000 in the beginning of October, and when the month ended and November started, it was just around $100,000, losing about $26,000 in value within a month. So the question is, why the drop? In my opinion, three things played a big role in this dip. Number one, profit taking. Number two, ETF outflows. And number three, the slightly hawkish Fed message that played a big role. Ethereum fell below $3,000, Solana below $200, and it was chaotic. A lot of traders lost money. Long-term bulls still predict a generous rise in crypto, including Bitcoin, in 2026. But in the near term, volatility remains high. So if you're trading crypto, stay nimble. That's my advice. But if you're a long-term trader, treat it like a satellite position, but do not make it your core. Quick advice, I do believe crypto is gonna rise in 2026, but how much and how soon, that remains to be seen. Now, as always, a quick look at where smart money is moving right now. Hedge funds are booking profits in high-flying tech and rotating into more value and cyclicals. Institutional investors are buying the dip in energy and defense, and retail investors are trying to catch the momentum in AI and crypto. So sentiments right now are optimistic, but the market is fragile. Even a bad CPI print, a hawkish Fed surprise, or even a geopolitical or regional flare-up could put the market in chaos. So between now and year-end, protect your gains. Do not over-leverage and try to recognize the trends. Now, as we move into early 2026, most economists see growth, but it's gonna be slow, but hopefully steady. And the drivers would be fiscal stimulus, strengthening global demand, and easing supply chain constraints. If the Fed cut rates again in December, we could see an early rally in 2026, and many finance gurus expect to hit the 7,000 point ceiling in early 2026. There's always a but. On the other hand, if the Feds hold off or inflation escalates, we could see a steady correction. Don't worry, even if it happens, it will likely be steady. So regardless, the long-term outlook seems positive, and the current moment may be a transition phase rather than the final act of the bull market. So as we conclude this video, the question remains, are we near the top or are we just getting started? I believe we are somewhere in between. Momentum is building up, but risk is also escalating. So if you stay disciplined, take profit when you should, and diversify your position, you will likely be in a strong position for whatever comes next. So as we conclude this video, I would love to hear what you guys have to say. Let me know in the comments down below. What do you guys think? You can watch my video on October here and keep following for more financial videos. Thank you so much for watching till the end. Bye bye.